Question number 11. A trader debited cost of repairing office equipment to the office equipment account. Cost of repairing office equipment. Repairing office equipment is an expense. It should enter into the repairing account. But instead of that, by mistake, they entered into the office equipment account. How did this error affect the financial statement? Here, expense must be understated. They are not entered the repairing expense. Expense understated. And asset must be overstated. So, here they are given profit and non-current asset. Non-current asset we know that is overstated. Expense, profit, how this affect the profit? When expense is understated, profit must be overstated. So, this error, profit must be overstated and asset, office equipment is the non-current asset. Asset also overstated. So, the correct option is profit overstated, non-current asset overstated. Option A is the correct answer. Question number 12. A trader uses reducing balance method of depreciation. What effect will this have over the life of a non-current asset? Reducing balance method means calculating the depreciation on net book value. Net book value is cost minus depreciation of the previous year. Calculate the depreciation on each year net book value. Net book value is the cost minus last year depreciation. Options are given. Depreciation charged evenly over the year. Wrong. More depreciation charged in the early years. Yes. First, the business will calculate on cost. Every year it is net book value means reducing the cost of the asset after deducted the depreciation. So, the depreciation amount will be high compared to the later. So, the beginning it will be more depreciation business charge. Correct option is B. Question number 30. Rashid provided the following information. Machinery cost, provision for depreciation. Depreciation for the year is calculated 20% on cost, straight line method. After the statement of financial position prepared, it was found machinery repair costing $2,000 had been debited to machinery account. Machinery account is overstated by mistake. They are entered the repairing amount in the machinery account. So, what is the correct balance on the provision for depreciation? So, the cost increase means business calculating the depreciation here on the cost. So, when the cost overstated, provision for depreciation also overstated. So, 2000 cost depreciation is overstated here. So, the correct depreciation, we should remove the depreciation of 2000. 2000 multiplied 20 by 100. 400 is overstated in the depreciation. So, the correct depreciation is 23,000 minus 400. We remove the depreciation of 2000. That is 22,600. Correct option is answer B. (14). At the end of his financial year on 31st August 2020, trader had a prepaid insurance. Prepaid insurance means they paid insurance in advance to the following year. How will this appear in the insurance account and the statement of financial position? Prepaid insurance means business is paying before time, before getting the service. So statement of financial position, it goes to the current asset. It is the current asset business has paid in advance. Then insurance account where the prepaid insurance is entered. Insurance is an expense, so payment bank will be on the debit side. Any accrued amount will be carried down here, while prepaid will put on the opposite side or the credit side. The prepaid carried down will be on the credit side. Income statement also on the credit side. Income statement is on the credit side. So, the question is insurance account balance and statement of financial position. Statement of financial position, current asset, insurance account, prepaid insurance. Prepaid insurance means business paid more than the actual amount. So, the actual amount of this year transfer, actual amount paid is on the debit side. Actual amount paid is on the debit side. So, current year amount transfer to income statement, the balance will be prepaid to the next year. So, the correct answer, insurance account, credit balance carried down. Credit balance carried down. This is correct. Financial position, current asset. The first option is correct. Option A. Question number 15. Hailey's financial year ends on 30th September 2020. She provided the following information. 1st October, rent receivable accrued on 1st October. During the year ended, rent received, 30th September rent received, and 30th September again rent received in advance. What is the question? Which journal entry would be made on 30th September 2020? Closing journal entry. Closing journal entry means income statement and rent receivable. Actual rent received is 6,800. Opening 1st October accrued. This is opening accrued. Opening accrued will be always be deducted from the current year. Then rent received in advance, 30th September. 30th September advance rent means this is to the next year. So closing prepaid will be always deducted from the current year income statement. So the correct amount is 6,800 minus 6,800 minus 480 minus 720 is equal to 5,600. 5,600 is the correct amount. So the journal entry, rent receivable is an income. So all the income transaction, all the expense will be debited in the income statement. Income will be credited with income statement. So rent receivable debit, rent receivable account debit, income statement credit. Rent receivable account debit, income statement is credit, the amount is 5,600. Income statement is debit, rent receivable is credit. No, income statement will be credited with rent receivable. Amount is correct, but the entry is wrong. Income statement account debit, rent receivable credit. Both entry and amount is wrong. Rent receivable account debit, income statement is credit. Correct answer is